I want to talk about today, guys, is going to be understanding Talk about today, guys, is going to be understanding risk versus reward. How can you tell if a stock is risky, or how can I tell if a stock is showing reward potential, that if I buy into this, I'm going to be making money. Like today, I bought CBIO because I thought there was going to be a lot of reward. The reward today was $360 for me. Personally, again, I wanted a little bit more reward, but at the same time, the reward was outweighing the risk. So what I want to talk about is determining risk versus reward. Now, we do have a lesson on this in the video library, which was made probably about 6 months ago, but there has been some updated things that I definitely want to talk about. What to look at, different indicators to look at, different ways stocks are reacting. So when I'm determining my risk versus reward, or what stocks to get in versus not to get in, there's definitely correlation between everything that I look at in the market, what stocks are up, what stocks have the best chart pattern. So let's get into that. As I already talked about today was CBIO. CBIO, guys, I talked about this play as my go-to play, which I made $360 off of, just because the pure fact that this stock had, to me, the best reward over risk. Risk versus reward. Reward was there, risk was limited, and that's why I hopped in on CBIO and made some nice profit. MOSY starting to move back on up. Little side note, again, we could talk about this play on risk versus reward, but let's talk about some indicators or some things you want to look at when determining risk versus reward. What you want to look at, of course, what are the go-tos? If we're bringing up a chart pattern, let's bring up a chart pattern right here. Let's say stockcharts.com, and let's look at, first off, you want to look at the RSI. Let's just start at the top. If I see a stock that is overbought, would I want to buy it? No, I don't. Because if a stock is overbought, that means there's going to be more shorting potential than long potential. Now, usually, guys, anything over a 70 is overbought. I usually don't get too scared of an overbought stock until it crosses an 80. Because most of the time when it crosses an 80, that means it's going to be coming on down. Every time AVEO has fallen, look at this line. It's been right at 78. So every time it came up to 78 on the RSI, went from 85 cents down to 74. Here it came up to a 78, went from 96 cents all the way back down to a 49. Here it was at a 78, where it was sitting right here at 85 cents, fell all the way back down to 68 cents. Seeing an 88 on the RSI, that's way up there. That's very high. So determining my risk versus reward, right away, I'm saying AVEO on the long side is risky. Right away, long side is risky on this play because of the RSI. Now, again, RSI, guys, a very great indicator. You guys can go to finviz.com. A simple little screener for you guys. Just always go to the screener, go to the technical side, where you guys can really just add the RSI. So let's say if you are looking for a stock that you want to look for a potential short, you could always just go overbought on an 80 and look at all the stocks that are very overbought already, possible for some nice shorting. Again, you could always do the price as well. Under $10, so you have a nice little 11 list right here of penny stocks that show you what stocks are very overbought or which stocks are risky to buy. Now, again, what I would want to look for a stock, I want to look for anything, maybe on the oversold part, maybe 40 or below, 30 or below, because that means that stock has a lot of area to move on up. So when I'm looking at a play, I want to see an RSI, guys, that is lower today. So let's compare this to CBIO, my play of the day. So CBIO, my play of the day, where is that? A 51 on the RSI. So 51 on the RSI, beautiful. That's what I like. Again, anything under a 70, the prime area is really right in this, like 40, 50 mark. It's not oversold where it looks like it's not a good company, but it's right in the middle, where it should be. And that's what I really like. Next thing, moving along, guys. Moving along, let's bring up. Let's just look for a few different plays right here. So we got LXRX. No, LXRX not doing too much. What next thing you want to always look at are going to be your indicators. So what we have here, 50-day moving average, 200-day moving average, and let's go on 13 EMA. So this is going to be looking at the chart, guys, and the chart indicators. So what am I looking at on CADC? So if I'm looking at CADC and I see a press release come out on CADC, I see a press release come out on CADC that says, hey, we just completed, positive trials. I say, great, CADC, that's a nice, great press release. Let me look into this chart a little bit more. I look into this chart a little bit more, and right now I'm just focused on these indicators. What do I notice? Okay, I'm at 225. At 234, I'm going to be getting held up. At 252, I'm going to be getting held up. At 256, I'm going to be getting held up. So that means I'm going to be, the most I could go to start with is going to be around 8 cents before I have to lock in any sort of profit, because I'm going to hit this resistance line at 234. Then if that breaks, I have to lock in at 252. Then if that breaks, I'm going to have to lock in at 256. What is the difference over here when I'm looking at a stock such as CBIO? CBIO on this potential play is that I'm above all those indicators. So let me put back on the exponential moving average right here, EXP, 13 EMA. What am I? I'm above the 13 EMA. I'm above the 50-day moving average, and I have room to run all the way up towards 913. So if I go from $5 to 913, even with 1,000 shares, I'm making $4 grand. You know, no one's going to complain about that. I have a lot of room to run. The indicators are allowing me to run. Let's look at MOSY because that stock is starting to get a little bit of attention. MOSY, beautiful. This stock is above the 13 EMA, holding it very nicely. The stock is the 50-day moving average way down here, and we have potential to run all the way up to 331. If the stock goes from 214 all the way up to 331, we know that this stock, you know, that's absolutely fine. $1.15 rip, I'm more than happy with $1.15 rip every single time. The stock has room to run. This is a good chart pattern. You know, the risk here, you know, we have 183 support, which is right at the bottom, and our reward is all the way up at 331. So we have room to run, just like we looked at, you know, right here on CBIO. We have room to run. Our risk is really nothing. You know, we have support at 450. Support's at 450. Our reward is all the way from 450 all the way up to 913. So that's what gets traders very, very excited. And that's what can lead to some very nice rips and some big time plays. So far we talked about the RSI, that we want the RSI around the 50, you know, moving average. You know, that definitely brings a lot of potential. And then on top of that, we also want to look at the indicators. You know, what has been a recent big breakout? DCTH. DCTH, perfect play right here. Perfect play right here before this nice gap up. And why was that? Well, that's because we have a lot of support. We have 13 EMA at 0.4 cents. We have the 50-day moving average at 4 cents. The stock went on a nice big rip. You know what happens? If I bought right here, I have very limited risk because I know I have very strong support. I have very strong support right here at 13 EMA and 50-day moving average, which is also holding up right here in the past once, twice, 3 times. So it has a lot of potential to move up. Stop loss could be right below this at like 0.432, and then we could start moving on up. And then we start moving on up, so my reward is, you know, endless. My reward is technically all the way up here at $200 or $1 where the 200-day moving average is. I could potentially move all the way from 4 cents all the way up to the 200-day moving average. So I can, you know, consistently start moving on up, 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 up. This stock has a lot of reward and limited risk because it has a lot of support. Basically, guys, what I mean here, what I always want to look for is I want to look for a stock that has a lot of strong support right where I'm currently at. I want to look for a stock that has a lot of strong support right where I'm currently at and has room to run. So for instance, again, we have a lot of strong support from the moving averages right here, also chart pattern, and this stock has a lot of room to run. It can run all the way up to 101. If I look back at CBIO, I have a lot of support at 450. It could run all the way up to $9. You know, these are very nice patterns and these are very nice plays. So it's something I just want you guys to always be on top of, always be aware of. What we were just looking at, MOSY. MOSY, this stock could potentially fall out down to 183. That's the support mark. It also has $2 support, but on top of that, we also have 331 200-day moving average. So we have more room to run up to the long side than the downside. So my reward is greater than my risk. We always have to take in chart pattern consideration, though. We always have to take in chart pattern consideration, as that is going to be some sort of risk as well. So for instance, we're looking at MOSY. Where have we gotten held up at on MOSY multiple times? MOSY, we look at this chart, we got held up at 225 once, twice, 3 times. Let's keep going back. Here's 4 times upper shadow. Bounce right here at 225 once. Here's a bounce play at 225 where this stock started moving on up. And that's basically about it in the last 6 months. But 225 obviously is a very tough area. So you kind of got to break it down a little bit more. So it's like if I buy right now, I'm going to have 225 very tough resistance that lately within the past month got held up once, twice, 3 times. So the smarter decision would be, okay, let's wait for 225 break. Break up 225, my next area would run, which would be at 270. So I would buy at, let's say, 225. That means this old resistance is going to hold up as new support, and I could have a possible 40-cent run, 45-cent run towards it that could bring me up to 270, which would be the next chart resistance line, which would be 613, which would be, which happened on June 13th, right at 275, back on 3-7, March 7th, right here at 275. This is an area that's going to be the next resistance line. So like MOSY. That's going to be a stock that's going to have the next resistance line and possibly bring the stock on down. But I'd wait for this play. I would wait for this play to break 225 because right now my reward is only 9 cents. My reward would only be right now 10 cents up to 225. But if 225 breaks, my reward would be about 45 cents. So I would just, always keep that on watch. So what we want to look at, we want to look at RSI. We want to look at indicators. Now moving on a little bit more. So again, RSI and indicators, guys, and chart history pattern are more on the actual, daily chart. The daily chart right here, which we look at, the 6-month chart, that is very important that we always, focus on. We're looking at these patterns, we're looking at these plays to say, hey, you know what? Do we have good risk or do we have good reward? Okay, holding this 50-day moving average right here, we definitely have good potential for a bounce play to move on up. Nothing's really holding us back right here. We have a lot of reward and limited risk. So that's something you always want to see. That's looking at the actual 6-month chart. So, keep your eyes peeled on, the risk versus reward in that manner. Now, what do we want to look at on the actual, 1-minute chart or throughout the actual day? How do we determine risk versus reward? Well, that actually comes down to a few different things, guys. The main thing you want to be looking at is going to be gap up, the volume, and the float. So again, gap up, volume, and the float. So let's stay along these areas on MOSY right now. Let's start with volume. So we have gap up, volume, and the float. So MOSY, what do we want to look at? So what we always want to look at is a volume on a play. Now, stocks get a lot more risky if no one's playing them because that makes them a lot less predictable. The more people that are playing them, the more predictable they're going to get, guys. Because, again, more people are going to follow the same exact fundamentals. Oh, let's buy at the break of the 50-day moving average. Let's buy at the break of 225. Let's sell maybe at resistance if it can't break. Let's sell at the 50-day, 200-day, 313 EMA. People are going to follow the same fundamental rules of stock trading. So having low volume increases your risk, guys, because you don't know if that stock's going to go on up, if one order is going to bring it all the way on down. So again, you want to look for a more healthy play. So, AVEO, when we have a good volume, AVEO has had some great volume today. Let's look at this on stockcharts.com on AVEO, and we could see, okay, AVEO, our volume is 45 million today compared to 1.5 million. So we are about 44 times, more than our average volume. So that means this stock is hot. That means this stock is going to be moving in one direction or another, and this means that this stock is profitable. It's also, predictable when you come down to it, add trend lines and everything along those lines. So what we have here for good risk versus reward, okay, we have good volume. That means the stock is hot for some reason. That means I have a better chance to, figure the stock out for what reasoning, if the stock has a credible press release, chart pattern, anything along those lines, and that it means you have higher reward than risk. When you have high volume and the stock is moving in a more predictable manner, following fundamental rules, you're going to have more reward than you will risk. So you always want to look for high volume stocks. So volume is very important. On top of that, you also want to look at float. Again, the biggest ripping stocks, guys, are the stocks with 1 million in float. Here's GLBS. GLBS, again, massive rip from $3 all the way up to $12. GBR, under 1 million in float, $1 all the way up to 370. CVIO, what we played today, 2 million in float. And this went from right here, $5 all the way up to $18. ETRM, 2 million in float, went from $1 all the way up to $30. The lower the float, guys, the better the opportunity. Now, again, this is just going to bring in more volume. This is going to bring in more activity, which all comes down to the predictable standpoint. But the lower the volume, the better. Now, AVEO, this stock is a little bit different. this stock is 108 million in float. This is a rare case. But usually, guys, when you look for stocks that are this big, they don't really move too much. So, if we look back at the past chart, 6 months or anything along these lines, our biggest day is from 72 cents up to 84 cents. That's not really big at all. That's 12 cents. It's good for that stock. But again, we don't really have any sort of big time rips at all if we look back. So seeing this is more of a rare case on AVEO. But again, the majority of the time you want to look for low float stocks. Higher float stocks are a lot harder to move. They don't have as big as rips. They don't have bigger climbs. They're more just, trendy. They head on down. Every single day is only about a couple cents, maybe up a couple cents, maybe down a couple cents, on these larger float stocks. That one's 61 million. So again, that's just something you always want to focus on. Here's SHIP, our biggest rip on this 33 million. Again, a little bit lower, so we have a little bit more momentum. 96 cents up to 120. So about a 20-cent rip's the biggest rip I had in about the last little bit right there. UNXL 55 million. Again, not really any too big of rips. Let's look at this. NOG. Again, NOG like 61 million. Here's a 61 million. Just trendy. Not really going from 245 to 269. That's the biggest green day I see, which isn't too much. It's really just a couple cents here and there, and that's what a lot of these plays do. PKD 132 million in flow. Again, low volume play. It's just understanding that these larger stocks don't really do too much. So again, your reward isn't very high, but your risk isn't very high either, because again, they're only moving a few cents. These low float stocks are a little bit more higher risk, higher reward. These higher float stocks are going to be lower reward, lower risk, lower profit. Low float is higher risk, higher reward, higher profit. But to me, these are the stocks I want to be getting into. So recap on the daily chart, guys. What do we look at? We look at the RSI, see if the stock's overbought, oversold. You can also look on the RSI. What else did we tell you guys? What else did we tell you? We talked about the RSI, the indicators, and you can also, what we went into recently was looking at the MACD. If we look at CBIO, when we look at the MACD, what is the MACD telling us? Right here, it is a buy, just a slight buy, just because, again, it's not crossing over, but we are above, the red line. So the MACD is good to go on the buy side. You can see right here, right where it crosses from the red line to above, from below to above, that's when we're on this massive rip. Right now, we're just kind of chilling above it, but the MACD is something you can look at along with the RSI, the indicators, as well, and chart pattern history. So it's something you want to be focusing on. Within the actual 1 minute chart, what do we have? We went over volume so far, and we went over float. Something else you want to look at is going to be the percentage, or on the percentage on the day, which kind of I included into the gap up. But what you want to look at is the percentage on the day, guys. Now, what you have to be focusing on, which is something that a lot of people don't understand, and they don't understand the concept of this, that, it's like one of my big pet peeves, guys, is that if you see a stock up 75%, 90%, 100% on the day, guys, why would you buy it? It's already up 100% on the day. You know how much that is? That is huge. That's 100% on the day. I say it, but I don't think you guys, some of you guys, a lot of you guys collect it, but some of you guys don't collect it, because you'll see AVEO go from 130 up to $2 or up to 210, and you say to yourself, hey, I'm going to buy here at the break of $2, and then all of a sudden it runs to 210 and then crashes all the way back down to like 175, and you're like, I don't get this. I don't like stock trading anymore. Why is it when I buy at $2, it ran from 130 all the way up to $2. Now when I buy at $2, it turns around and falls on me. This isn't fair. And I hear that all the time. Well, what did you just say to yourself? The stock went from 130 to $2. The stock was up 80% already. It already went up 80% on an 80 what do we have? An 85, 86 on the RSI. We're already overbought. The stock already made its run. Early bird gets the worm. You're in at 140 when it's only up 15%. Okay, that's great. Now you're up 20%, 30%, 40%, 50. Okay, 70% up. The stock already made its move. If you're not in first, guys, don't get in. And that's why, again, I'm not here to get you guys in plays that you guys are chasing. That's why I'm not alerting stocks that are already up, at $2. That's why I would much rather have you guys be short at 180 than to be long on a stock that's maybe up 99, 100, sometimes 200% on the day. Because again, you have a lot more potential on the stock falling than you do going up. Basically, again, what I got in on CBIO this morning. Guys, when we look back at this, at what percentage? What percentage was this from 450 up to 470? It was about 6%. It was around 6-7% on CBIO when I got in. So I got in when it was at 6-7% because I was hoping for the stock to run up to 46%, 70%, 90%, 150%. But I would rather get in on a play when it's up 5%, in along this area, 5, 6, 7%, instead of buying a stock that's already up 45% because that already made its move. And stocks aren't going to climb forever, guys. The majority aren't. Do we get supernova breakouts, on plays where they go multiple dollars? Yes, but they don't happen every day. We haven't seen a supernova breakout in probably about a month now. We haven't seen a big time supernova breakout in probably about a month. This is probably the last main one where it went from 41 cents, moved up towards around $3. We did have DCTH, which moved around 400%, where it went from 6 cents all the way up to 37 cents. That was very nice. I'll give it that. That was probably the most recent, nice big breakout we had on DCTH. That was the most recent nice big breakout we had. And that happened last week, the beginning of last week. And that was that nice play. But, we haven't had a big, ETRM, like up in the dollar range, like $1. Like this went from, look how crazy, $2 all the way up to $30. Just 1,000 shares. You have a $2,000 account. Imagine buying 1,000 shares on your $2 account, and then 5 days later you're up $29,000, $28,000. How awesome is that? And that's why I think it's so amazing. But again, it all comes down to risk versus reward. And if you buy a stock that's up, let's say 46% already, or you buy a stock that's up 80% already, you're having a very high risk. You're having very high risk instead of buying a stock that's up 7% with maybe an indicator right below it as support, and that's very low risk with very high reward. And that's what it's all about, doing, guys. Looking at these stocks with very high reward and low risk, and that's what you want to figure out. It comes down to a lot of finding where support is. You want to figure out a lot on, which way the stock has a better chance of moving. You really want to look for the space that is available. If I have limited space up because of an indicator, because of a chart pattern, because I have low volume, I have limited space up but a huge way to fall, that's a lot of risk versus reward right there, guys. That's a lot of, a risk for a little reward. So be on the short side. If I have a lot of support and a lot of room to run, I have a lot more reward than risk. And that's something I want you guys to always be seeing. Like SRNE today. SRNE, if we could break to, let's say, 220 right here, we have a lot of reward ahead of us because we could get all the way up towards around 285. But again, our risk would be all the way down towards around 186 because that means because that is the last area where the stock has some nice support. So we technically do have more risk than reward, but at the same time, it's not really worth getting into right now because there is still a lot of there's more reward than risk, but at the same time there still is a decent risk because there's not too much volume on it. There's not too much volume. No one's really playing it. So you have to look at the chart pattern, but also look at the volume. Look at the hype. See how much it's already up. And that's what you have to really put all into consideration, guys. It's not just one thing. When it comes down to everything, what do you look for in determining risk versus reward? You look for the RSI. You look at different indicators, 50-day moving average, 200-day moving average, 13 EMA. So again, let's bring over this chart again. CBIO, let's go 13 EMA. What do we have here? Again, we're above 13 EMA, above 50-day moving average. Have 200-day moving average to run $5 away. 51 on the RSI, buy alert on the MACD. Let's look at, if you like chart patterns and see if it was the same exact thing. Like HTGM right here, guys. Like HTGM, 50-day moving average holding right here. If we're buying right here, let's say, we have 13 EMA as our bottom support. We also have a ton of chart support right here at 321. So it most likely wasn't going lower than 321. Now we start moving on up. As I already showed you, our most recent one, DCTH. DCTH, we could buy easily right here at 13 EMA at 0.50 or 0.5 cents. Because that is the 50-day moving average, 13 EMA, a lot of room to fall, a lot of room to move on up, not that much room to fall. Again, only a 54 on the RSI. It is a buy rating as well on the MACD. If we look at, again, not good plays, CADC. Let's say the stock comes out with a press release. Yeah, I'm going to hit resistance at 232, 250, 256. Not much room to move on up, but we have the world to fall on down. Right now, I'm just typing in, some random plays, see what we can get. SKLN. SKLN comes out with a great press release. Let's say gaps up to 175. Gaps up to 175. I'm still not playing this. Why? 187, 50-day moving average. If I buy, let's say at 175, the most I can possibly make on a smart trading side would be around 17 cents. I could possibly fall all the way down towards $1.57 though. So again, just something I want you guys to be focusing on. I want you guys to be watching, and I always want you guys to be ready for these plays. On top of that, guys, what you want to look at is going to be the percentage of the play that has already moved on up. What's the percentage of the play that has already moved on up? Is the stock already up 45%? Or am I getting in on a stock that's up 8%? It really depends. Am I up 45% or am I only buying a stock that's up 8%? This morning on CBIO, I bought a stock that was up 7%. 7% because everything was below it, had room to move on up. Then it started moving on up towards around 20% is where it started falling. I want to get in on these stocks as early as possible. I don't want to get in on these stocks when these stocks are already on these nice big rips, when these stocks are already on this nice big climb. I want to be first. Early bird gets the worm, guys. So it comes down to CBIO. Again, if I'm looking at this play, I see good press release. I see that the chart has good indicators. 50 on the RSI. It was worth the move up for me. Now, again, what are some other things I want to look at? Again, we have percentage of the move already. We want to look at the float. 2 million in float is a lot easier to move than 120 million in float. Float is the shares offered to the public. And then volume. I don't ever want to buy a stock like SRNE, which again has a good chart pattern, which could possibly break through 225, but it's not going to because it doesn't have enough volume. MOSY. MOSY doesn't have enough volume to break through 225 enough volume. MOSY. MOSY doesn't have enough volume to break through 225. If I bought MOSY right now, 225 would be resistance. Until it breaks 225, that's when I have nice potential to run all the way up to 270. Again, because of the plain fact that volume's weak. More volume equals more predictability because all those people are going to be following the same fundamental rules that we follow. Makes it predictable, guys. So you have to determine your risk versus reward in every single play. Let's go through some of these right here and let's determine if there's a lot of reward or limited risk on each of these. So let's kind of break it down real quickly. We'll just go through these plays and let's see what we have. Let's see what we have on these. So looking at this. Let's go ITUS. Immediately ITUS, I could see a little bit later on volume, but let's look at a lot of it comes down to the chart on ITUS risk versus reward. So boom, immediately not worth my time. 123 50-day moving average. It already came up to 115, failed. Obviously, this stock has a lot more room to fall than it does to move on up. Came up to 115, right next to that 123 mark. Hasn't been able to break. Not worth my time. Not a stock I'm going to be getting into. APDN. Next stock that I'm looking at right here, APDN. APDN, this stock is an overall very light volume stock, which doesn't make me very secure because it's a very light volume stock. Now, we do have a break of the 50-day moving average today. Personally, just from having experience in the market, I would stay away from the stock just because of the light voluminess, and I know it could easily drop down if volume fades. Like today, APDN, let's look this up. I bet you it's destroying its it's probably destroying its average volume to its current volume, but that's not how it's probably going to be coming up in the near future, so I can imagine a big time drop. Average volume 67,000, current volume 477,000. So about 5 times more than its current volume, which is great to see, but this could easily come back on down, especially at 150 natural resistance. I don't think this is going to hold. To me, the reward is not there. It already made a pretty nice move. Let's keep on going. MARA. MARA, the stock may have potential. The stock may have some nice potential if it can close above 37 cents today. If it can close above 37 cents today, MACD has a buy 65 on the RSI. Most likely it would consolidate on above the 50-day moving average for a little bit, but we do have room to run all the way up to 146. Only concern is that we do have right here, this mark right here. This is going to be the top of this platform right at 62 cents, and it's also the area where this stock bounced at. So that means that's going to be very tough resistance. Resistance right here this whole entire time, and then we also have 62 cents where the stock bounced at. So I would be thinking 47 cents up to 62 cents, and then I have a 47 cents to 37. So right now we're kind of right in the middle of risk versus reward. We're at 47 cents. Could potentially go to 62 cents, or it's going to fall back down to the 50-day moving average and try to consolidate and bounce at 37 cents. If we break through 62, we do have room to run with hype all the way up to 146. So again, every single stock right here, I'm just trying to break down my risk versus reward. That's all I'm trying to do. I'm just trying to break down my risk versus reward and figure out where my better potential is. RWLK. There's not too much. There is reward towards the stock because it's moving up so hard, but it does have an 88 on the RSI. We are right at the 200-day moving average, which most likely is going to be coming back down to 276. We've had a massive move. Most likely, if we look at RWLK, last 5 days percentage change. Last 5 days percentage change, it moved 134%. MARA last 5 days, 186%. Last 5 days on AVEO, 138%. This stock has already gone on its move. It already made its move. It already moved 100%. To me, I'd be looking more towards the shorting side. I'd be letting it go. I'd be looking for that play that's going to be at 23% and then in 4 days from now be up 134%. Not a stock that already made its move. And that's what you guys have to understand. We're not here to get into stocks that already made its move. We're looking for stocks that are going to make their move. So, that's very important that you guys can judge risk versus reward. So, other than that, though, guys, we are wrapping up, this overall lesson. Just want to make sure that you guys understand how I judge my risk versus reward and that you can follow along the same patterns and same criteria so you guys can be more successful in the